InvestData Trading Academy live with Ambrose. Yes, I'll tell you that the global market is breathing out after how many days of what of a sell-off we have experienced because of uncertainties surrounding the trade tariff war that have triggered a lot of sell-off in different markets. But I will tell you that yesterday we saw a breath out in the market after Trump has started backtracking his statement and his move on tariff. We saw many investors taking advantage of the pullback to buy into value, and that's why I always tell you that in any market you are trading, either you are trading in US market, in Asia market, in Africa market, you need to understand the importance of pullback, especially when it is information driven or policy driven. Know that it's a matter of time. Now that they are negotiating to come to conclusion where the policy direction will be going, but I see that in Asia, we saw that Asia market have rebounded strongly on also positive earnings. That's why those earnings in Asia market are missed. The news of Trump, kind of backing back is also what have triggered position taking because in US we have seen that funds have left that market quickly because of what? Because of fear and also the economic data coming there becoming weaker and weaker in US that have triggered a lot of funds leaving there, going to mature market, a market like what Asia and also in Europe. And that alone have kind of impacted most international companies on the world. I tell you, one international market companies that operate in US, in China, in Europe, in Africa, those companies, of course, when you say there's a tariff affecting, because the company operate in different of this, economy, or let me put a domain, at one time this company is going to benefit from. That is why you see funded and most of international companies, in the global economic scene. But I believe that with this, kind of the tracking back, I believe that investors, both in Europe, both in Asia and Africa, are also looking how can take advantage of what of this pullback, and now that we are seeing a kind of a breakout in the market. But the good news is that if you look at what happened in Asia market, as I said earlier, we are seeing that even the economic data that are coming in Asia also are looking also better and also interesting. Why that of US and farmers can see that most data that come recently are not positive, so are seeing a sign of weakness in that market. Coupled with what the latest forecast that came from IMF that US economy is going to slow down further to 1.8 from 2.7. That also sent a signal for where global international investors will be looking at where to put their money, and that trend has continued. Also, like I said, if you look at the Europe market also is among the stocks that are also in the green this hour because of what we are seeing also some tech company posting positive number in that domain, and at the same time the news of also this what we call the escalating trade war or tariff as negotiation is ongoing. But I believe that in this 90-day space, which we are in between now, that we expect that many economy managers and also both their fiscal and monetary policy, they have to rethink it now to see how they can boost their economy, because already tell you that there's a shift in global trade already, whether there's a kind of negotiation, whether Trump is backing back or kind of backtracking, all those ones is just English. And I tell you that this move alone have kind of opened a lot of economy managers and those that are going to look inward to take advantage of what they are seeing to kind of diversify their source of relationship with others, or their source of trade, or their trade partners. Let me put that way. That's going to strengthen those economy. I believe that Africa should be a better position than now. Now that we're seeing that things are changing, I think the new market will be a place, and that is why most companies' results, even in US as I speak now, are missed numbers. Even already Q1 is stated, that means we're going to see that missed number in Q2 to until Q3 before we can see changing in US market and in US companies. Even that we're seeing some numbers that are also good, as but I'll tell you, most of them that came from US, they are also missed for Q1. And also in the data of Europe, we're seeing a better number. Don't forget that Europe was seeing a continued rate cut in that environment. That also supported that economy. Even in US, where we're seeing that the president and the chairman of Fed are kind of shaking whether to sack him or not. The statements that are coming that are not befitting. Those ones also try kind of putting a kind of some confidence shaking or kind of in that market also, coupled with the outlook for the US economy. And these are what have triggered the backing down or kind of slowing down in this tariff from that environment. Because I will tell you, all statistics or indicators are pointing that we're going to see a high inflation in that environment. And Trump was also blaming the Fed chairman for cutting rate, not knowing that economy is built from governance. But I believe that that between two of them, once anything that come out also interest more invest in the public. But I believe that for you and I that are also watching the whole global trend, now that we're seeing a breakout, it has also have triggered most of the market, as I said earlier. But if you come back and look at what is happening in Africa, I'll say that African markets are not looking bad. Especially look at what happened in South Africa market, also in green at this hour. NGS Nigeria here is in green, and Ghana market also can see that all these markets are breathing out from this backing now or backtracking, anything you want to call it, outside of market release. Release to most of the panicking domain where investors are rushing toward safe haven. If not those safe havens, so they are not even sure. But I believe that in anything you are doing, understanding the market you are playing, that's why knowledge is very, very important. When you are trading with knowledge, I will tell you, you can save well, you can invest well because of what you are trading with knowledge. Knowledge is very, very key whenever it comes to what trader. I said, we'll continue to guide investors in this platform and other of our fora where we meet also to work to kind of discuss this market, because that is the only thing we need. Once you are investing in knowledge, I will tell you that you are on the right path as we speak. But down here in Nigeria, we are seeing a kind of a 3 days rebound after we see the market constantly trading in the southward direction. We saw for trading today, we are seeing the market has also crossed the another 1,500 cycle line, but still showing sign of market is recovering. For me, it's a good one. We need to also watch the market. But I believe that as Q1 and matured market, we are seeing a lot of them are missed. For some financial, that came from financial sector, we are seeing them positive. I believe that as we're also looking forward to see some Q1 number in 2025 here in Nigeria, expect to see a better number. Already, we have seen some coming from the food and beverage sector, which have seen the psychology of the market in that industry. You can see even when the international breeder posted a negative full year result, at least you can see there's already what it kind of be. And also because also we have seen the Q1 that came from Nigeria period, seeing a turnaround in their performance where their Q1 and also their FS loss slowing down. That have also triggered the kind of activity we are seeing. They can see that the stock came from as low as almost 32 naira to almost 38 or 0.9 now or 30 9. For me, you can see that these are the things. And also, we see that most of them also, if you are careful enough to see and look at the number that were released for full year, we also saw that many of them in their last quarter have already turned positive. If that trend continues, we want to see most of them positive, because nothing have changed in Nigeria. We might see that the global economy is panicking, but the fundamental in our own market have not changed. Apart from the exchange rate that we have seen that have been a bit stable, but in recent days we saw a lot of volatility in that. But I believe that the economic manager, especially CBN, should look in to see how to make that funds become more cheaper in Nigeria economy, so that we can able to proportion to kind of if anything happens in terms of this continued trade war or tariff issue, we're able to also to stabilize, especially now that was snamos before now about 14% for goods that are coming from this this nation. I believe that we should look inward. Most of the sectors we are seeing companies that are about stabilized and in this economy. Those we need government policy that will encourage these companies, and more will come up to, because that we depend less on imported goods, and what we can do by looking inward, even imported raw materials, and looking inward. This I think that will help the economy. I believe that it's a time for the economic managers to work to do their own bit and make sure that our economy remains in the path of recovery and growth. Yes, because even I've seen so far that the economy have remained a bit stable in terms of growth due to either rebase of GDP and that of inflation. We've seen that the last inflation figure has shown that yes, the rebates have not really pointed, but I believe that there's still potential for the economy. Even seeing inflation for the month of March trying to end this inflation that we experienced before now, and that I believe that there's still potential in the economy if more positive policy that will come from the managers, and also they implement those policies judiciously and effectively. That's what I believe, that there's no cause for alarm for our nation. Rather, we need more policy direction from this our economic managers and the government at large, because fiscal policy is also very, very important at this time. Seeing that the global fundamentals are changing, global economic fundamentals are changing. We need to see how can we look inward and see how we can push on some things, to encourage some sectors and industries and some players in the market to be more active, and also to increase their productivity. And that is the major thing. Once you increase productivity, you're likely to work to drive the economy. That's why all eyes are on our Q1 number to see if we're likely to see a positive GDP figure. What we're seeing some focus in mature economy, because Q1 give insight to see how their GDP for Q1 will look. Already we have seen that, but for us here, we're also waiting to see more of our Q1 number to let us what our GDP look like, because I tell you productivity is very, very important in any economy. Yes, before we go to our topic today, I think we're looking at the talking numbers on Accesscorp, First Holding Co. and the UPDC. And before that, I want to quickly look at what is the market doing, the market data as we speak. As I'll tell you that the market is not doing badly at all. Our market has maintained an uptrend, like I've said earlier at the beginning, that the market have broken out another cycle line of 105. As we now, market is also oscillating. We're seeing that as we speak, market is also, there's also profit taking right now. We're seeing that the oscillation in the market is also becoming what we also notice here as we speak. But before this time, I said that the market is having a positive market break, with index trading at 104,000. It has pulled back for 5. Before it was 1,504. But I speak now, I see that market has gone low. It reached from 104,843 at this hour. You can see that even the candlesticks that have changed this hour. You can see it here. That's why it's very, very important to pay attention. This is a live class. But as we speak, we're still having a positive market rate of 21 gainers and 15 losers as we speak. But yes, I think that people are also trying to take profit of what we have seen in the last 2 days, that before the holiday and after the day, to cash out. But I believe that as we'll see more number, because the market still presents the opportunity to buy into value, because of the pullback we're seeing from the right here at this peak here down to this point. That is a correction that has come. But if you look at it, the market also rebounding in that. And that, for me, if you look at the top gainers, I said we have a positive market breadth of 21 against 15. But if you look at the top gainers, I'll tell you that we're seeing that Cornerstone Insurance is leading in that direction, and that of VDC Group, VFD Group, companies also up. They're going 9.62% after the markdown for the bonus of 5 for 1 and the 2 naira 50 kobo dividend. You can see the stocks around 17 naira 10 kobo. This is an opportunity for you to buy depending on investment objective. Also followed by one, see that Omatech is also among the top gainers, up by 8.6. You can see Annihilation and Africa Prudential. These are the top 5 gainers as we speak right now. But on the flip chart, we see that pullback, in CWG, 10% down, selling at 7 naira 20 kobo. Great opportunity again. And also, we can see that Abebe building that have rallied on the strength of news that VFD has also acquired stake in them. We have seen the impact, and now that clear the market, I see that people already taking profit on Abebe mortgage bank as we speak. Also, we see that the initial, which is TP, the initial PSC also, we have seen that is down by also 9.8. You can see ICO Insurance also down by 7.3, and also Suno Assurance. These are the top 5 losers also in the market right now as we speak. But there's no cause for alarm. I tell you, the market goes up, and as we the market have pulled back even below the 400. Also, I've gone back again to even as high as also 105,000 and 47.62. The same market have pulled back. That's why you must pay attention. And also, what guide you that you must see the momentum and the direction as centralization will continue in any market at any given time. We are coming back to look at the chart, but quickly we'll look at those numbers. We are looking at to see the position of these numbers, which is very, very important for us, because even though the numbers are looking at the past performance, it's pointing at the back. Technicals will tell you what is happening at the future. Most of the fundamentals we look at, apart from the economic data, most of them are looking at backup, but also economic data. But if you look at the market, looking at the price and the volume, it tells you about what is happening. That's why you must pay attention to technical analysis anytime, any day, and know how to combine it with your fundamental, whether economic or corporate. But most of them are all talking about the past performance. For you to stay ahead of the market, you must not to look at what is the psychology of the people in the market, what the sentiment in the market is very, very important. Right now, we'll start from let's start from first holding, first hold co, group or anything we call it, or PLC, or we call it. If you look at the number that released, for me, there's an improvement in this number, even when market try to punish them or investor fee in form of disappointment in terms of or disappointing, or in terms of the dividend payout. But look at where this company is coming from, where this group is coming from. This is a group that have suffered high non-performing loan, and they made provision in previous years, 200 billion, 100 billion, and they continue to stay in business. For me, it's not a bad one. Yes, we are seeing improvement in the figures, but I think the area of paying dividend, that have to do with what with the regulations not down by what regulators side of it, because they are looking at beyond this focus. They are looking at the capital adequacy of the bank, looking at the non-performing loan before they can approve a higher dividend. But for other banks, you are saying that they are paying high dividend. There's also something going for them. Most of them have made sure that their non-performing loan is as well at a good measure. Because don't forget, before now, the CPN rate is 5%. That non-performing loan should be above performing. I can see that some of the banks, that some are having even that 5% flat, some are having below, some are having marginal above. No, it tells that those banks are really solid. That means they are not exposed. No, I believe that is what also telling on what on first back. Yes, I know that you have seen this figure before now. This area I'm coming that you must know why they are not paying for it. It's not because the numbers are not there, but it depends on what the regulators are seeing, especially when you are exposed to what all these high non-performing loan. It has the way of also affecting your payout, because they want you to see that your non-performing loan is at the minimum before they allow you to pay more. Yes, we have seen that most of the company banks in Nigeria exchange or the economy have robust retained earnings, which also a plus for them. If you look at even the first bank, we are seeing that the retained earnings has crossed also 1 trillion. For me, it's a good one. Therefore, let's look at these numbers critically, and also what we want to point out. Yes, anytime, any day. First thing is very, very important. I tell you that even though we are looking at company results, either in a banking, in other sector, we look at what is the gross earnings. Gross earnings for the financial sectors. For insurance is the gross insurance or gross premium, what call it. But for the bank, look at the gross earnings to see the total income. Is it expanding or is it contracting? For me, for the banks, we have seen a lot of expansion in most of the banks, and you can also the impact of high interest rate also supporting these companies' numbers. Like this bank's number or financial numbers, and put it. For me, I see that for the first code, we saw a real growth in their gross earnings, moving from 1.56 trillion to 3.21 trillion. This is huge, and for me, it's a good one. But if you come to look at the interest income, you can see also that it moved from about 936.7 billion to 2.4 trillion. This tell you what I just said now about the top line. You can see how this has impacted also the gross income of the company, and income from what from fees and commission. You can see despite there's a payment here, you can see that the impairment charge for vacancy it also almost 100% from 200 million to this still we're still having a positive number at the end of the day. You can see what I was saying, that the provision for non-performing loan or bad loan is also one of the things that this institution is suffering. But you can see that now, even as we do, but that means go and check others. Yes, also CPN is not playing with it, because they say that because of high interest rate, there's a lot of default in the loan assessment of or repayment of loan for most of the investors or customers of these banks. On that note, that's why you see them, they are making huge provision for all this. But I believe that for we investors or traders, we must pay attention to this. But when you see a top line that is very strong, also look at other numbers that come with. That's why I pay more attention to what the top line, the profit after tax, the earnings per share, the profit margin, and also to see how solid is the what we call cash flow of any company, whether the bank and also other. But for the bank, even when the bank's cash flow is negative, because we understand the nature of their business, because of they learn, they strength and all those that most times it is when it becomes consistent that you come to ask about, because of the nature. Only time you see negative shareholder cash flow for the bank, it should not be a thing that because of the nature of their business. But I believe that what we are seeing in First Bank is not totally a bad number. It's a good one. The people that they are going somewhere, but for those that are going to invest for long term, also it depends on your investment objective. These numbers are not looking bad. At the end of the day, look at the other incomes from or other operations. You can see here, you can look at other income, but we're talking of gross earnings before now enter the tax, the tax angle, and also company expenses and all those. But look at also dividend income, whether from other companies, also the other operating incomes also that come from this other companies. Also want to look at it, which is good. But also look at the personal expenses. You can see also it moved from almost 100% also from 175.9 billion to almost 308.5 billion. That is huge. And all those things at the end of the day, you are seeing the operating profit for the period ended December 31st for the bank was seeing a growth from 355.33 billion to 795.93 billion for the operating profit for the year. but also the also share of profit from associates also imparted. But at the end of the day, what is the the profit tax? The profit tax is very very important, or what we call the tax on profit or profit after tax, anyone you want to call it now. At the end of the day, you can see that there's a huge change in their profit expenses from about 39.4 billion to 118.4 billion. You can see a swing, but at the end of the day, we are seeing that the profit for the year for continuing operation is about 663.5 billion against 308.4 billion. This for me is a good one for the bank, and it points to where the bank is, is also heading to. At the end of the day, you can see here, you can see profit for the year because of other income from profit from also from discontinued operation. We're seeing a total profit for the year at 677.1 billion against 310.4 billion. At the end of the day, we're seeing that even with the recent listing of the primary market right issue, yes, the earning per share still remain indicative because we are seeing a growth almost more than 100% from the previous year to where we are seeing today. That also why I thought that I will have an earning per share of 18 naira 69 kobo against the 8 naira 55 kobo. At the end of the day, we saw a profit, a dividend of 60 kobo against 40 kobo. For me, like I said at the beginning, that it is not just the numbers here is the regulators, what are they saying at the end of the day. Yes, quickly look at what is the balance sheet. The balance sheet of the bank is robust. I will tell you that. Look at the balance sheet of the bank. How it move from the total assets move from 16 trillion, sorry, 16 trillion to 16.9 trillion to about 26.5 trillion. You can see this switch for total assets. As I say, Nigerian banks are really expanding now. That's so at the end of the day, look at the net total shareholders fund. At the end of the day, what is it? You can see also from 1.7 trillion to 2.8 trillion. For me, it's a good one for at the end of the day. But one thing is very, very important that the investors should understand that you can see I said earlier at the that retained earnings of this bank can move from 500 and something 588 point 588.9 or 589 billion to 1.1 trillion at the end of the day. For me, it's a good one for the bank, but the payout might look a bit disappointing. But for future investing, depending on where the investment objective, and also as we are seeing changes in this number, a point to where the bank is also heading to. It's also a point where the bank is very, very important that we look at all this when we are looking at this figure. It's not just looking at this is the cash flow. Could I always say that cash flow is very, very important. Cash flow from operation is also not looking bad at all. From about 1 point something trillion to about 5.01 trillion. For me, it's a good one. It's very good. Other investment, cash flow from investment, also that cash flow for financing is negative. But for me, operation is very, very important, and that is that these are for investment and also for financing. If they are in negative for me, because I said earlier, because of their nature of their business, we are not really moved by that. But these are the things that are very, very important and anytime, any day. Yes, quickly look at what is happening, the number of assets. Yes, I'll tell you that assets is already leading even the whole industry with terms of gross earnings for assets to record gross earnings of about 4.9 trillion against 2.6 trillion in 2023. You can see the move alone. This tells you that this is almost 100% no growth in that. It tells that the company business expanding. And also, if you look at the figures here, look at the interest income calculated using, you can see from 1.5 6 trillion to about 3.11. You can see that it's more than 100% already. We are saying here for me it's a good one for assets, and that's why even assets is still struggling in terms of the bottom line. And you can look back and see that because the continuous acquisition they've been having, that also playing on their bottom line. But from the last meeting, the MDs and the management had with the financial editors, which one of our colleagues, our editor InvestData was in the meeting, he made it clear that yes, he gave them 5 years focus of Access Bank from the meeting, and then it's found that this year 2025, yes, Access Bank, yes, might say Access is like a Wando that they can open, but I'll tell you, before they said that they know that others that in their peers or the same first year bank have gone ahead of. If Access can slow down on acquisition and start consolidating their activities, I see that bank going places. On the way they are going in Africa, I'll tell you there's a lot of hope for those that are in that bank. Yes, we are still going to see the leadership side and also the management side of even the new chairman of the bank. But I believe that it has been part of the bank before now. I'm not coming back again. It has something to offer. Seeing other peers and also the what Access is sitting on, I'll tell you, for Access to rank among the top 10 in Africa in terms of assets, and also I believe that yes, profitability will also follow very soon. On that note, I see investors that you take this advantage of pullback we're saying now in that stock at this rate of anything below 25. So those that are thinking medium and long to start positioning, and also you can see that Access no type of leadership or has changed, but I believe that even that because they have a common goal to achieve making the bank but when I saw the forecast they gave the editors, no, I see that yes, they are going somewhere. I see a future for this bank. For those that are taking medium and long term, it's a place to be. I will say that on any time, any day. Yes, you can see that at the end of the day, they have about profit after tax of that moved from 619.3 trillion billion to 642.22 billion. And at the end of the day, we saw that EPS also slowed down to 16.71 naira and against the 17.23 they recorded in the previous year. But don't forget that assets also have also increased their share in issue from as low as around the 35 billion to almost 53 billion now to speak, and that of now I'm first holding I move from around that of also 32 to around 39 or 34. It is now after they say their own last primary market. But I believe that assets have kind of round up with meeting the CPN requirement in terms of 500 billion. I see this bank going places, and that for those that are thinking medium and long, it's a place to work. Because for me, I see potential in the bank. And also, yes, it's a little improvement from their reward. They paid 1 naira, it's 5 kobo. Final now we're seeing 2 naira, 5 kobo. For me, it's not a bad one. The total for the year will be about 2 naira 50 kobo. Those that have patience can also buy, and especially for investors that are looking for income on quarterly or on half year. That means 2 times in a year. Access will still pay you 3 dividends this year. And also for me, it's a good one for those that are thinking, medium and long in assets. Yes, like I just said, because of our time is fast spent. We'll have to also discuss another one. But let me quickly also look at the UPDC quick one before we call it a day. Yes, our time is already giving me time, but let me quickly look at UPDC. Sorry for that. Yes, UPDC. What I'm going to use UPDC is that I saw a question on our platform on our WhatsApp that is it changing phenomenal what they talking? Is it changing trend that companies that are having negative retained earnings are paying dividend? But I want to make it clear that negative shareholders form is different from negative retained earnings. Negative retained earnings might be in a company while the total equity or shareholders funds are still positive. How do you know we are having a negative retained earnings? And that I've seen in in Japan and also in UPDC. But see, their retail loss position also declining. And these are not financial sector that they have a lot of regulation. Also, because their shareholders fund is not negative, they can also and they're making profit. They can also be writing off their loss and also they can fully bought. For me, for seeing 1 kobo from UPDC and 4 kobo from Japan, it's not telling you that yes, these banks are set to reward you, but they are also mindful of their negative result. You can see that from Japan, we saw a decline from 18 billion to that about from 20 billion to about 18 billion in terms of their negative return. And then also in UPDC, we saw also the same decline in the but still their shareholders fund is still positive. That's why I'm making clear here. But looking at UPDC number, which I told those that are following us, especially in the masterclass, that this number will call, but let's look at it. When it comes, we'll like to see a pullback before position, and which happen when the number from market related to it, we'll see a pullback and people able to take position at a good price. Because what I'm seeing today in the global economy, in Africa, in Nigeria, is that I'll tell you most of the economy we are seeing across the globe is the real estate business. It is their infrastructure that we are seeing that is part of their GDP. Yes, as the federal government recently made a fund available, about 1 trillion real estate fund available, and now mortgage banks are seriously there to sponsor individual, and also This company have gone ahead also partner with the Pencon in terms of providing low housing for what for contributors. The people that put account with Pencon. So me tell that it's a business for this company, and that's why when I saw the movement in their revenue we're going to look at together from 5.3 billion to 11.79 uh, billion. It tells that there's something working for you, and which is also a good one at the end of the day. I believe that these are things that investors should pay attention. At the end of the day, come and look at also the bottom line. Because of our time, look at the bottom line from 221.51 million to 836.91 million. Can see more than 200% growth. I tell you that there is a potential in this company where you cannot pay attention, and other real estate investment trust. That about for this economy that can do a lot of things, and also I believe that the management style for this company, as we are seeing, is a place that investors should look at, especially if you are thinking also medium and long. There's a lot of potential in this company, but as I see, that's why I say I must look at it before and because my time is fast spent, but already giving me sign that I need to round up. I even have exceeded the 20 minutes. I look at 20 to almost 30 minutes. For quick one, I want to show you the 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 balance sheet. Look at the balance sheet here. You can see that the lower I mentioned our retained earnings loss position. You can see that retained earnings here is still negative, but it dropped from 909 point something 9 point something billion to 9.1 9.6 to 9.1 billion. It also continued. Also, this drop tells that yes, the company is aware of their position, but the negative, the total equity is still positive, also improved. That is why when you guys ask that question, I've also somebody asked him also, which I want to also add to it in that platform, that yes, it is not when a company has a negative return earnings that cannot pay dividend. It is when a company has a negative shareholders fund. No, but now other things are there that's also supported, and also they are kind of reducing their loss position in terms of their retained earnings. For me, it's a good one for the company, which I also mentioned Japan part of it. We could also look at what is the cash flow of this company. I know that I need to pay attention to that cash flow. That's why I say I will look at cash flow. Look at the cash flow of this company. I know why I bring it here. You can see the cash flow, the cash flow for the let's say net cash flow from operation. You can see from 1.9 1.97 or 1.8 billion, sorry, in 2023 now to 8.22. I tell you, this company is liquidly upfront to do business. On that note, there's a lot of opportunity. Those that are buying this company, we're just saying one couple is just giving a statement where the company is heading to. They can afford to pay dividend. Might go, domestically in terms of pay up, but give me one couple, they sign their back. Even that of 4 couple for Japan also is that. I mean, if you are thinking very long, that company start keen as they are making profit, especially if government policy is in favor of these sectors I don't mention it. So you see what is happening in the mining sector where we're seeing Japan going deeply into, and also what is happening in real estate. Government knowing that this is what also support the GDP of the economy, and they are, the CBN is also putting money to make sure that this infrastructure gap is bridged. And even the banks have a lot of money now, more than 5 to support this sector in terms of infrastructure is part of what part of GDP we're looking at. For me, I believe that this is a company to watch if you are thinking medium and long term. Yes, on this note, I will say we'll be running up. Going back to the chart again to conclude. But let me do that. Looking at the chart, you can see that the chart is still an uptrend. And quickly call up, because I don't want to call up 2 charts here to see if the market is still at overbought region or market is already retracing up. We need to pay attention to this because sorry, let me quickly do it now. This money flow and also our ROSI very, very important relative strength. Let us see what is happening. You can see these figures. Why I bring out this chart is very, very important. You can see here, you can see also money flow. Yes, because of it went up, was selling, but still almost 50.49 as we speak now. Yesterday it closed at 51.49, and I see that market have crossed also the T line yesterday. That trend is still there. You can see that money flow is still coming up after touching as low as almost 30, 32. Now back again. This market is already retracing up. Market is already moving up. But for you to understand what I'm just saying, for you to understand, if I quickly look at this figure, take a look here, or take a trend line here, draw it here, and see touch this red one here, touch that here. You can see that yesterday the market also break out from the downtrend. That's why I tell you that market is also looking up. For me, you can see this position. For me, it's a good one. You can see that at this point now, this place has become like a double bottom for the market here and here. But now, market have broken this strong resistance level. But at this point, the market is finding strong support. You can see it here, and it has also gone up on that trend. Like I say, when you see this, what we call a hammer, this hammer is normal because we are seeing more of a big body than the weak. But still, at this point, you saw this rebound. And also, the worst thing we should pay that volume is still relatively low. It tells you that these investors are still not yet in the market, and they are also expecting to see the strength of the Q1 number for them to be positioned forward the current financial year. Even as a negotiation or Trump is backing down gradually, I think that's where what they see the Q1 number that will give them a direction. You will see more volume and more money coming to the market. On this note, I'll say thank you. See you for Friday, hopefully. Sorry for taking your long time. My people, sorry too for allowing me to use this time. Sorry, and I appreciate you for your time. And also, this is why we traveled and we are back now to our business. I say see you on Friday. By God bless. Bye.